All right, half an hour more to go, 20 minutes more to go before you can start relaxing over the weekend. So let's chat a little more about markets. Siddharth Khemka, head of retail at Motilal is here. Siddharth, you saw the fall yesterday and today as well. Are we going lower, or we'll just hang around? This is a small nervousness, bout of nervousness. Shouldn't worry much about.
Thanks, Ajay. So I think if you look at overall markets, we have seen a lot of strength both in the domestic as well as global markets, and that is on back of the strong macros that we have seen, especially for the Indian economy. GDP growth surprised everyone. GST collections continue to see strong upturn, and other smaller macro data points also. So, for example, the gross toll tax collections data came in yesterday, which also implied some improvement in the overall movement. You also look at the power consumption, which is at 8-year high. So all these trends definitely indicate that the Indian economy is on a strong footing. To top it all, we had the corporate earnings, which was kind of a 4-quarter high growth in terms of earnings. Margins have started improving, raw material costs have come down, and corporates have been able to pass on the price hikes because of the earlier raw material price that had gone up. So overall, net, I think while the short-term movement could be volatile given the sharp up move that we have seen in April and May, but the overall view continues to remain very positive. If you look at Nifty, it touched 18,600 first time in October 2021, and we are now back to same levels after almost 19 months. So the 1-year forward P for Nifty has corrected from 23-24 to now about 18-19 times, which is much more comfortable. And given that FY23, the overall corporate earnings or Nifty earnings grew at 11% after almost 35-36% growth in FY22. And on back of this, we are now expecting about 15 to 18% earnings growth for FY24. So the earnings growth trajectory is good. FY23, we saw a lot of global macro headwinds, starting with the Ukraine war, then the commodity price inflation, and then to top it all, we had the interest rate hike cycle. So luckily for us, all these are now turning in favor. The commodity prices have come down, inflation is under control, and now we are looking at a situation where central banks are taking a pause before they start lowering the interest rates.
Siddharth, so you're very busy these days, it seems, pouring into numbers, results, and so much
of
all of that.
Analyzing macro reports.
That you started ignoring your the look only. What's with the new look? For a moment, like I couldn't recognize you.
Just trying to have a new
all right. Tell me something. You must have gone through the earnings season very closely, right?
Talk to us about. He's been so busy going through that he's neglected his look.
Yeah. But talk to us about some select juicy things which you have really looked at into the numbers in terms of biggest earning upgrades. Which are the areas, which are the management which are turning around the numbers and resulting in strong earning upgrades coming in?
Yeah, so I'll tell you, see, the one sector, so definitely banking and finance has been leading from the front, but I think auto is one sector which has definitely done the bulk of the batting in this quarter, and the highest upgrade that we have seen, especially in the large cap. If you look at the Nifty 50 companies, Tata Motors is where we have done bulk of an earnings upgrade. We are seeing the company benefiting from all round growth in across the segments, and the company has been generating a lot of cash flows. They are looking at reducing their debt. All the 3 business segments, you can say, are doing well. The domestic CV cycle is looking at a recovery or growth in the CV cycle in India. The passenger vehicle business is doing well on back of new launches. The EV penetration, Tata Motors has almost 80% market share in the PV electric vehicle segment. And the global JLR, that also is benefiting from improvement in the supply of the semiconductors, improvement in demand, and also penetration of EVs. So I think that is one space, the entire auto space, where I think a lot of upgrades and positive news flows will keep coming in, numbers will keep coming in, which would be surprising on the positive side, where Tata Motors is kind of leading from the front.
Okay, that's the view coming in, getting a little stock specific as well with Siddharth. And I just want to map out some of these interesting movers over the last 1 week, which have had a fairly decent run. Tata Tele, for instance, has scaled up nearly 25% in the week gone by. Suzlon, of course, a 13 rupee stop, but nonetheless, it has been a smart mover. There's been a Torrent Power as well. It's been a newsmaker. Abaz, 17% is what the stock has gained. And something like a Sharda Cropchem as well has been very active on the charts. Let's get in a view then from you, Kunal, as to how you're looking at some of these names. Anything looking good for a further up move?
Yeah, I think Sharda Crop could be interesting. The stock has given a breakout. In fact, we've seen most of the the fertilizer or space showing signs of a very strong breakout. Fact was one of the stocks which led the breakout. Sharda Crop over the last I think 3 or 4 months was going through a patch of consolidation, but this move which has led the stock past about the 500 520 mark is a very powerful move, and I would believe now that we could be looking at a strong volume breakout, so which means potentially another 100 rupees on the upside. 650 660 should be a target which should be on the radar for Sharda Crop. And stop loss for this trade you can keep at closing basis 520.
Let's also get in Sharad, who's spoken to a lot of people in the dealing rooms talking about specific stocks. What is the buzz right now in the dealing room, Sharad?
Well, yes, in focus we are having Manappuram Finance, and what we are getting from dealers is that the institutional pressure which was there when it comes to the selling of the stock, that has actually come down, and Fidelity Group has actually trimmed down its stake over the last 1 month. Now, for the March quarter, the shareholding pattern for Fidelity Investments in Manappuram Finance, that stood at roughly 3.7% stake of the company. And do remember, the dealers have stated that the impact of the ED order, that has also been largely priced into the stock itself. Apart from this, also the company has stated in its recent con call that the company is having a sufficient liquidity of roughly almost 1,000 odd crore rupees, while undrawn lines are there of roughly 3,300 odd crore rupees. Now, looking at the stock, especially the valuations part, we see the valuations of the 12-month forward price to book ratio that has fallen below 1 times. Now it's coming in at 0.9 times. Now you compare that with the peers itself, especially Muthoot Finance and IIFL Finance, their price to book value ranges between 1.7 to 1.8 times. So there is a valuation gap still, and that's what industry experts are expecting, that this would be favorable going ahead. Apart from this, also the month of May itself, there were some gyrations in the stock, but from there onwards it is up 10% from the May lows itself. And looking at the 12-month target price as set by the Bloomberg, it's coming in at almost 143 rupees share, and that indicates roughly a 23% odd return potential going ahead.
Okay, thanks very much, Sharad, for those details. Let's find out what those BTST trades are. And Vinay, what's on your radar?
So, as I said that we are bullish on the PSU as well as the power company, and power finance companies also have been doing well. So, REC is a one stock which is continuously doing good. It is trading at its all-time high, and today also with the momentum it is rising. Volumes are also rising. Price is also doing good. So, considering all this, I am recommending going long in the REC for BTST around 149, keeping a stop loss at 145, and on the upside we can expect a target of 156. The another stock which is looking good is the Ramco Cement. So cement as a sector has been performing very well. So entire cement sector is looking strong on the charts, and from that Ramco Cement has taken a lead, and it is trading at its 52-week high. So considering the momentum and the kind of requirement we have, which is BTST, it requires a momentum. So Ramco Cement is looking good. So around 932, one can go long with a stop loss of 915. On the upside, we can expect a target of 960.
Okay, there you have it. That's Ramco Cements. What about you, Kunal?
So United Spirits is the first stock which I would suggest as a buy. Again, classical breakout for the stock, flag pattern breakout, up move for United Spirits. So I would suggest the 920 as a BTST target, stop loss at 860. And the second would be a buy on BHEL. I strongly believe that this stock is due for a very big up move. It's shown a kind of up move over the last 1 month, but then post that it went into a consolidation. Now I believe that the stock should be ready for a second round of up move, hopefully breaking past about the 90 levels as well over the near term. So target of 90, stop loss at 80.
All right. So those were some of the BTST ideas. Siddharth is still with us. Siddharth, there is one pocket of the market which has done phenomenally well in the last fortnight or so, consumption. After a bad quarter, on the view that, FMCG in particular, on the view that the worst is behind, volume growth will start kicking in, and monsoon will also aid consumption. But today, so Britannia was at a lifetime high, ITC almost 450 and corrected from there, HUL, all of them, Marico. But then the fear is now seem to be setting in that monsoons, the quality of monsoon may get impacted because weather agency in US has confirmed El Nino. Do you think the fall which arrives from here on in FMCG top counters should be bought into? Volume will indeed improve?
Yeah, so if you look at the FMCG index, it was the first index to cross its previous highs and make new highs. And rightly so, because the sector definitely benefited out of the fall in the raw material prices, especially some of the consumption items. And there was, as you rightly highlighted, the points which were expected to improve growth. And in the quarterly management commentaries also, we heard how sequentially the demand is kind of coming back. So one weak spot was the rural consumption demand, which was expected to get improved after the monsoon. So while IMD has been reiterating that there will be a normal monsoon, there are definitely risks because of the El Nino factor, and with the US agency now highlighting that this year could be a year of El Nino. And rightly so, we are seeing the stocks in FMCG sectors getting booked, especially from the short-term traders. Overall, I think the consumption demand is definitely set to improve, not only for some of the staples, but also for the overall discretionary space. We are seeing that in the auto sector, some of the consumption discretionary items, as well as in the retail space. So we are seeing how the demand is coming back and how numbers are likely to improve for some of the retail consumption themes, some of the QSRs. So within that space, we just recently upgraded Avenue Supermarket from neutral to buy rating. We believe that there is a long runway for growth in the retail space. The company has utilized this time to expand its store footprint and will benefit the most when the demand comes back. The company has very good financials because of the weak same-store sales, where the stock had underperformed, and valuations from its peak has definitely come down. So overall, we are expecting DMart revenue and PAT CAGR of 27 and 29% over the next 2 years. And because of the good cash flows that they are going to generate, we see a 16% growth in the retail footprint, which should drive the stock from here on.
Okay, let's talk about another area of the market which is doing phenomenally well and people may not realize, but cotton prices coming down is a big fillip for a lot of companies where cotton is the raw material. Pull up Raymond, pull up KPR Mills, Vardhman Spinning, Nitin Spinners. This entire value chain of spinners, apparel makers, all of them have been outperforming the market last 15 days because cotton prices have come down. Siddharth, what's your take on some of the integrated textile players?
So I think, yes, definitely there is some momentum that we saw in the textile players. We generally have a few of the home textile players under our coverage, not the entire textile sector as a whole. And within that also we have, say for example, we like Trident, which is a small cap company. We have a buy rating on that. If you look at the overall home textile segment, demand was kind of pushed back because of the key markets of US and Europe facing the slowdown and the recessionary pressures there. So which is bulk of that is now factored in with now the raw material, the cotton prices coming down. They would benefit to some extent on the margins front. So I think, yes, one can look at selectively in some of the textile names from here on as well.
And charts wise, Kunal, anything stands out from the textile space which looks smart?
I think Raymond is the only one which stands out. Ajay, I think the stock has gone through a different level of uptrend over the last 2 years. I remember, I think, tracking the stock at 440, 450 levels 2020, and from there the stock has gone through a very strong uptrend. So even at current levels of 16, 30, 40 for Raymond, it's still completing a bullish flag. So I think I remember almost a month back, there was some sort of a news flow which led to a mild correction for Raymond, but I would still believe that it's getting ready for a second round of uptrend, and hopefully this time around the stock should break past above the previous highs of 1740.
Vinay, pull up Macrotech Developers, the largest real estate after DLF. This week it has done well. At 600 it may appear, actually there's a split over there. So the price is actually 1200 now. From 800 all the way to 1200 if you adjust it. But new price of course is 600. What kind of levels expected there? The momentum is backing this one. Vinay?
Yeah, Yeah, so definitely outperformance is there, and it's a large stock and recently surpassed its 200 days moving average, and now it is also surpassing the previous swing high, which was at 592. This previous swing high was made in January 2023, and this is being taken out, which is a very good sign. So as a stock, it can perform very well, and sector is also doing well. So I see a resistance, next resistance around 634 for the short term, so which is around 5 to 6% away from this price. So momentum is there, sector is performing very well. So 634, which happens to be the previous swing high on the charts, can act as a next resistance for the counter. So one should continue to hold on this counter. Overall, it looks very convincing on the charts.
Okay. It does look convincing on the charts, but Siddharth, you may have seen the results this quarter. Not only macro tech, but if you take Colte, DLF, any name you pick up, volumes and profitability is visible. What are the top names which you track or cover?
Yeah, so I think if you look at the entire real estate pack, the sector has been doing well, and company after company had reported record pre-sales numbers, which also got reflected into the financials. Unluckily, you see these stock prices had moved up earlier, and because of the interest rate hike cycle, the sector had kind of underperformed in the last couple of months. But now with the RBI taking a pause and a likely pause by the US Fed, I think the interest rate looks to remain benign going forward, which should aid the overall sentiments for the real estate space. Demand, which was initially very strong and people were thinking that it is a pent-up demand after the COVID, has fortunately sustained even after that. And that is where we are seeing that record pre-sales data coming out company after company. What has also helped is that the supply discipline that the large players have maintained over this period, despite the improving demand, supply has been very gradual and consistent just to meet the incremental demand. Overall, we have been positive. Some of the names that we are positive, we recently upgraded Godrej Properties. We believe that the valuations are comfortable. We continue to like Macro Developers, which is a large player in the Mumbai region, continues to do well. And we see strong growth there. So these two are, you can say, our preferred picks within the overall real estate space.